Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that the market at the moment is testing quite strong previous monthly support, which is now turned resistance. In fact, from here, this previous rejection to the upside was created. After that, the market broke below the zone, and at that point, that previous support was turned resistance here. And as the market is currently testing previous support and resistance, we could expect a potential rejection to the downside away from this area. So on the monthly, everything seems quite bearish with a potential rejection of monthly resistance. Dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, what we can notice is that there is quite important structure at this level. We can see, in fact, how starting from here, every time that the market tested its zone, it got rejected to the upside. However, what we know is that in the market, previous support, once it gets broken to the downside, becomes resistance. So as we were already noticing on the monthly, all this area is also previous weekly support turned resistance. We can also notice that in general, if we have an impulse and we want to measure the correction, what we have to do is take our Fibonacci from the high to the low of the impulse leg. And if we do that, we can see how we have a 0.32 and 50% retracements, both lining up exactly with this previous support now turn resistance, which essentially creates confluence of resistance inside of this area that should act as a magnet for the price to be tested and then potentially rejected to the downside. Going down on the daily time frame, what do we have? Well, from a daily perspective, first of all, I did speak about NZDUSD a few days ago. When the market was here, I explained all the reasons for which we could expect this rejection to the upside. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, now that the market has created this move to the upside, where we could be looking for the next potential move? Well, in a situation like this, as we have seen already previously, by looking at the monthly and weekly timeframes, there is the possibility after a bit more bullish price action to see a rejection to the downside. Now, if that will be the case, if from here the market actually creates a move to the downside, in that case, essentially we would have the creation of a daily M pattern, because if we follow the movement from here, we have up, down, up, and at that point, if we get a move to the downside, we would have the creation of this M pattern. And in general, after the creation of an M pattern, what we could expect is a potential reversal higher for the completion of the M pattern at the neckline, which is the previous support turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, so hedge funds, and we check the data precisely for the NZD. The first thing that we have to keep in mind is that if we are checking the data for the NZD, we are actually already checking NZDUSD because all currencies on the spot are traded against the USD. And if we look at the data here, what we can see is that with the last reports, if we look at the net positions, we went from having minus 8.7k net positions all the way up to having minus 130 net positions. Now, this shows a huge increase of the net positions, meaning a huge shift on the institutional side of the market from the bearish side to the bullish side. In fact, if we look at the longs, we went from having 6.7k longs all the way up to having plus 16k longs. So clearly institutions went and increased their longs from 6K to 16K. And if we look at the shorts, we can see how we went from 22K all the way down to 16K. This shows how institutions have been adding longs and closing shorts, therefore making NZDUSD stronger. Now, this increases the probabilities that if we will have the creation of this daily M pattern, at that point, there is the possibility for a potential reversal higher for the completion of the M pattern at the neckline, which is essentially the previous support and resistance, which is the completion zone of the M pattern itself. So if we will have this rejection to the downside and creation of the M pattern, how we could be approaching a potential move higher. Now, as usual, we have to be reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective combined with the COT data. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to $97, one-time payment, and as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them directly from your student dashboard after you join the mentorship program, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in description. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.